Good morning and welcome back to Morning Markets from True Potential. Paul Durrance, Investment Director. Today, if we start by looking at how stock markets performed yesterday, we had UK stocks getting off to a good start for the week, up 0.4%, really helped by the performance of banks and commodity stocks. In Europe, we saw mixed returns depending on the region you look at. There was some concerns around the business sentiment data that came out from Germany and just the general strength of energy prices. In the US, we saw marginally positive gains, but a relatively quiet day with all eyes on the US interest rate decision coming out on Wednesday night. In terms of economic data, fairly quiet, but what really caught the headlines was Nord Stream 1, which is the main pipeline that supplies gas from Russia to Germany and broader Europe. What we found is that state-owned company Gazprom in Russia, they decided to cut supply through the pipeline from 40% last month, which had already been cut last month, cut it in half to 20%. So really restraining the supply of energy that goes to Germany. The challenge will be for Germany, especially given their dependency on Russian gas. What they will struggle as they go into the winter months is filling up their storage facilities, their energy storage facilities. They said yesterday that they will struggle to get to 95% and will have to look for alternative sources of gas, but the challenge for them is the amount of volume that they require. For countries that are very industrial intensive, the likes of Italy and Germany, big manufacturers that are very dependent on energy, they risk rationing and therefore reducing the amount of output. It's a big challenge for Europe to contend with, and Russia continues to weaponize effectively Nord Stream 1 to try and get what they require. In terms of elsewhere, what we heard from US retail giant Walmart, I'm sure everybody's familiar with, but what we heard is profit warnings for the second time in 10 weeks. Investors pay a lot of attention on company earnings because of the insight into corporate fundamentals, but also the macroeconomic trends that are persisting today and may persist into the future. For Walmart, what they're seeing is a squeeze on their profit margins. Coming out of the pandemic, consumers were flush with cash and were willing to spend on goods, really benefiting their sales coming from US retailers, the likes of Walmart. Walmart benefiting from strong sales growth and therefore coming into this year had increased the amount of stock that they hold, expecting consumer demand to remain robust. What is challenging consumers right now is the inflationary pressures, and that's changing consumer spending habits. They're rotating away from goods and into services. For Walmart, the challenge that they now have is not only declining consumer demand, but a lot of excess stock that they need to shift. For them, they are therefore reducing prices in order to get rid of excess stock, but this is a real issue for their earnings, which will be released in 3 weeks' time. However, for the consumer, with prices coming down for goods, that should help ease some of those inflationary pressures. That's everything from us today. Thank you for listening, and we'll see you tomorrow.
If you're interested in taking your investing to the next level, or would like to know more about the options available to you when you retire, then download our free guides to ISAs and pensions. These are available in the video description below.